If you're a Kentucky business owner, you've probably heard that workers' comp rates are going down again for 2026. But then you open your renewal and your premium didn't drop. In some cases, it even went up. So what's actually going on with Kentucky's workers' comp rates, and what can you do about it? Let's break it down. I'm Adam Sheridan with Reed Brothers Insurance, and one area we focus on every single day is workers' compensation, whether you're a one-person operation or a company with hundreds of employees across the state. Today I want to walk you through what changed for 2026, how that affects Kentucky workers' comp rates, and what smart employers like yourself should do before your next renewal. First, let's start with the news. The Kentucky Department of Insurance has approved another decrease in workers' compensation loss cost for policies effective in 2026. That means on average we're looking at about a 9.7% decrease in loss cost, and this isn't a one-time thing. This marks 20 straight years of overall loss cost reductions in Kentucky. What that means is the underlying cost that insurance companies expect to pay out in claims is going down again. That's great, but that does not automatically mean your premium is going to drop. We'll get to that in a minute. Since you probably don't live in the insurance world, loss cost sounds like jargon, and honestly it is, but it matters. Here's the simple version. Think of loss costs as the raw wholesale cost of claims. Low-risk jobs like office work tend to have low loss costs. Higher-risk jobs like manufacturing, contractors, trucking, healthcare have higher loss costs because the injuries are more likely and they're more severe. Every year the approved loss cost tells insurance companies, here's what we expect on average to pay out for these types of jobs. Then each insurance company takes those loss costs and applies their own multiplier. That multiplier covers their expenses, profit, and their view of risk. When you combine the approved loss cost with the company's multiplier, you get the base rate that shows up on your workers' comp policy. So over time, those changes in loss costs are a big piece of what shapes Kentucky's workers' comp rates. Now the question you actually care about. Will my workers' comp bill go down next year? The honest answer is maybe, but it's not guaranteed. Kentucky is a very competitive workers' comp marketplace. Each insurance company starts with the approved loss cost, applies its own multiplier, and then layers on your specific business factors. So even though the underlying loss cost is dropping again, your final premium can still go down, it can stay about the same, or even go up in some situations. Here are the big levers that will impact what you actually pay. Class codes and payroll. Has your mix of employees changed? Are you adding higher risk positions or growing payroll? Your insurance company's multiplier and pricing strategy also plays a factor. Some insurance companies will pass the full benefit of the decrease along, others will adjust multipliers or credits. Your claims history and experience mod. For many employers paying $5,000 or more in annual workers' comp premium, your experience modification factor, or EMOD, can move the needle more than the statewide rate change. Speaking of, let's talk about that experience mod, because it's a big deal. If you've had little or no claims, the continued statewide reductions are great news. You're starting from a cleaner base, and better competition among carriers can give you more pricing power. But if you've had more frequent or severe claims in the last 3 to 5 years, your story's different. The experience mod can still push your premium up, even while loss costs are going down. That 2026 decrease in loss costs might help offset some of that increase, but it's not going to erase the impact of claims. If your mod has crept up, this is the perfect time to review your claims and loss runs, tighten up your safety and return to work practices, and then make sure that the current carrier you're with is still the right fit for your risk. This is exactly the work we do every day with clients. So what can you actually do about all this? Here's a simple checklist you can walk through before your next workers' comp renewal. Number 1, pull your current policy and experience mod worksheet. Know your current mod and how close you are to a credit or a debit. Number 2, review 3 to 5 years of loss runs. Are there open claims that need to be closed? Do any reserves look too high? Are you seeing repeat injuries? Same body part, same task, same shift? Number 3, confirm your class codes and payroll estimates. Make sure your employees are classified correctly, especially if your operations have changed. And if you use a lot of 1099 labor, subcontractors versus W-2, make sure that's clear. Have your account marketed to multiple carriers with another statewide decrease in loss costs. It's a great time to make carriers compete for your business. A strong safety story and clean loss history can unlock additional credits. Build or tighten your safety or return to work program. Companies reward companies who take safety seriously and get injured workers back to work quickly. All of this helps you control your individual risk picture, where the broader trend in Kentucky's workers' comp rates continue to move in your favor. You should absolutely reach out to an agent, whether it's us or someone else. If your premium has jumped, even though you keep hearing rates are going down, if your experience mod is over a 1.00 and you just don't understand how it's calculated, you've grown quickly, added locations, changed the kind of work your employees are doing, or you just want someone to translate all of this jargon into, okay, what should I actually do next for my business? That's what we do every day. If you own a business, have employees in Kentucky, and want a second set of eyes on your workers' comp program before it renews in 2026, I'd love to talk to you. You can call us at 606-679-6311 or shoot me an email. We'll help you make sense of your current program, spot the big drivers of your workers' comp cost, and then see if this new 2026 loss cost decrease can translate into actual savings for your business. I'm Adam Sheridan with Reed Brothers Insurance. Thanks for watching, and if this was helpful, hit like, subscribe, or share it with another Kentucky business owner who's trying to make sense of their workers' comp rates. We look forward to working with you.